Very good evening to all of you. I hope all are well. Today we are going to start Schedule 3. We had completed the Schedule 1 and we have also completed the Schedule 2. So let me start the Schedule 3. Before starting the Schedule 3, just give me the answer. What is the Schedule 3? Very good evening. So Schedule 3 क्या चीज का है? We all know that Schedule 3 is negative list. Absolutely correct. Negative list means activity or the transaction which are neither goods nor services. Activity or the transaction which are neither goods nor services. That is the Schedule 3. There are total 8 activities in the Schedule 3 and also there are 2 more notifications which we will discuss. The first transaction is employer to employee in the course in relation to his employment. So, like salary is neither goods nor services and therefore there is no GST on the salary. Similarly, like director remuneration. So, the director remuneration would be the part and parcel of the para 1. Service by any court or tribunal. Service by any court or tribunal will also be considered as neither supply of the goods nor supply of services. Now that clause 3, member, function performed by MP, MLA, state legislature of members, members of the panchayat, municipality, duties performed by person who hold any post in pursuance of the provision of the constitution in that capacity, like president, judges of the Supreme Court. These are the position by virtue of the constitution. Then duties performed by any person or as a chairperson or member or director in body established by the central government or state government or local authority and who is not deemed as an employee relationship, who is not deemed to be the employee, then that will also be covered in the Schedule 3. Correct? Now, there are certain more activity. Let me share the screen. So, service after death, funeral, burial, etc., including the transportation of the deceased, would be considered as a negative list. Para 5, we have already covered sale of land and I can say completed building. In short, I can say that it is a completed building. What is that? Schedule 2, Para 5, Clause B. We have covered in the last class that basically under construction building. Because if it is under construction, then it will be treated as a supply of service and then taxable. So if it is not under construction, so it means 100% consideration is being received after CC or first occupancy, whichever is earlier. After that, the 100% consideration is being received, then that particular transaction would be covered in the Para 5. Actionable claim other than lottery, betting and gambling. Then supply of the goods from non-taxable territory to the non-taxable territory. It means let's say I have purchased the goods from USA and directly supply the goods to the UK without being entering into India. Then supply of the warehouse goods to any person before clearance for the home consumption. So goods has been purchased, it reaches to India, but I have not filed the bill of entry for home consumption. Till the time I have not filed the bill of entry, if I have make the sale prior to that filing of bill of entry, it would be out of GST. And para 5, schedule 2, schedule 3, para 8 clause B says that high seas sale. Supply the goods by the consignee to any other person by endorsement of the document of the title after the goods has been dispatched from the port, but before clearance for home consumption. It means goods were on high seas and it has been sold prior to that. Again, it would be out of GST. This is small entry of the schedule 3. Let's also discuss the impact of schedule 3 on ITC. I can divide in two parts. Total schedule 3 has 8 entries. In ITC, you can just write the section number also. In the 17 subsection 3 of the CGST Act, we will discuss that out of the 8 entries of the schedule 3, the only entry number 5 is considered as only entry number 5 is considered as exempted supply only for the purpose of reversal. See, there are rest 7 entries which are not considered as exempt supply. So what is the meaning that if it is exempted and not exempted? In the ITC chapter, we are going to discuss if something is exempted, then we need to reverse our common input tax credit. So in short, I can say that will the schedule 3 transaction impact the input tax credit? Answer is apart from para 5, rest 7 entries not impacting the ITC. But if I have the common ITC, point to be noted, this common word is very important. If someone has the common ITC, then it requires the reversal only by virtue of the point number 5. Rest, no requirement of reversal of common ITC. Now, that the following 2 activities is also considered as negative list. It has been clarified or it has been added by way of notification. Not in the schedule 3, there are 2 separate activities. If you read the 7 subsection 2, clause A talking about schedule 3, clause B talking about power of the government to issue the notification. So the government has issued first notification 14. They are saying that service by way of any activity in relation to the function interested to the panchayat under Article 243G or municipality under Article 243W, then it is neither supply of the goods nor supply of services. Then they have also added service by way of granting of alcoholic liquor license against consideration in the form of the license fees or application fees by whatever name called. We know that alcoholic liquor per se is non-taxable supplies, but if the license is being issued, alcoholic liquor license, then it will be considered as neither supply the goods nor supply of the services. Till now, I hope it is clear. Any question, please let me know. If you so there may be the doubt with respect to the schedule 3. If you have any doubt, kindly ask so that I can move to the biggest concept of the composite supply and mixed supply. The last important concept, then we will discuss certain clarification issued by way of circular with respect to supply chapter that we will discuss in detail. So fine, let me move to the study material and then discuss about certain clarification with respect to this schedule 3. I am not reading the example. Yes. Sorry. Sorry. I think there was a problem in the camera. Can you please explain about the point related to reversal of ITC and exempt supply? Sure, Abdul. Abdul, I was saying that schedule 3, we are not paying the GST. Schedule 3, we are not paying the GST. So the doubt was, do I need to reverse my ITC? So why there is a requirement of reversal of ITC, that we will discuss in the ITC chapter. But only point I like to highlight that there is a concept of exempt supply which is being defined in the 17 subsection 3, which says that schedule 3 only one entry will be considered as exempted supply, which is that, what is that? That is para 5, sale of land and completed building. So if you have common ITC for that particular sale also and for other business also, in that case, you need to reverse your common ITC. But otherwise, there is no requirement of reversal of common input tax credit, even though you have the schedule 3 ka transaction related to land and completed building. Absolutely. Mr. Sankara O, I do not know that when the hard copy of the material, etc., would be available. Regarding para 2, services by the court or tribunal established under any law for the time being in force, the term court include district court, high court, and Supreme Court. Further, there was a clarity, leviability of the GST on amount or the fees charged by the Consumer Dispute Redressal Commission. So that was the question which is being raised. So it has been clarified by way of circular 32. They are saying that consumer redressal fees may not be the tribunal literally, but because they are not set up under the constitution. However, they are having the characteristic of the tribunal, which has been clarified by the definition. You can read that definition. Consequently, the fee paid by the litigant while registering the complaint with the said commission are not leviable to GST. Any penalty in the cash imposed by or any amount paid by will not attract the GST. That is being clarified by the circular. Then there was one more clarification with respect to entry number 5, para number 5. What was that? Para number 5, sale of land and completed building. So the doubt was, suppose if the land is being sold after certain development. What is the development? Like labeling, like drainage line, water line, etc. has been carried out by the supplier. Now he is selling that developed plot. Will it attract the GST or it will come under the para 5? It is clarified that sale of that land after development of that land is covered under this para and therefore does not attract the GST. However, if any service has been provided for the development, so for example, this is the land. Mr. A is the owner of that land. Now he has hired Mr. B for developing that land, like these work, leveling, drainage line, water line, electricity line, etc., for which he is charging any amount. Then that amount would be chargeable to GST. After that particular development, if this land is being sold to Mr. C, will it attract the GST? This part has been clarified that it will be still considered in this entry and not attract the GST. So it has been clarified by the circular 177. Fine. Now, actionable claim. What is the actionable claim? Actionable claim are included in the definition of the goods, and Schedule 3 exclude the actionable claim other than lottery, betting and gambling. It means the lottery, betting and gambling are actionable claim, and these only 3 are considered as goods. All other are outside the ambit of the actionable claim. Okay, merchant trading we have discussed, IC sale we have discussed. Fine. And there are 2 notifications we have discussed, panchayat and municipality function and grant of the alcoholic liquor license. Now the third part, they have clarified by circular. CBIC has clarified that following activity are non-supply, intra-state movement of the various mode of conveyance, interstate movement of the various mode of conveyance, interstate movement between distinct person. What is the distinct person? In the last class we have discussed, if permanent account number is same, but the GST number are different, then they are be treated as distinct person. Correct? Now, in that, there are various mode of the conveyance has been moved, like train, buses, etc. Will it attract the GST? It has been clarified that where such movement is for further supply, then shall be treated as a supply. Otherwise, it will be neither supply of the goods nor supply of services. And interstate movement of the rigs, tools, spares, and all goods on wheels like crane, etc. Above circular is also clarifying that it shall mutatis mudandis apply to the interstate movement of the rigs, tools, spares, and all goods on wheel. Such interstate shall be treated neither supply the goods nor supply of services. So this is the completion of the Schedule 3. Now, let's move to the one more important concept. Before that, I will take up the queries which has been asked related to land. Yes. I hope Mr. Abdul it is clear now. In the last class, we have discussed one concept, that works contract. In that particular concept, we have discussed work contract means multiple different type of the work, but with respect to immovable property. At that point of time, I have asked one question to all of you. That suppose that work is with respect to the movable property, movable item, in which I have given the example of computers or AMC of printer. Then the question was, will it be work contract? In the GST, the answer is very clear. It is not the work contract. Then if it is not the work contract, then what is that? If it is not the work contract, then what could be that combination? Because my example was like AMC of computers. It would include goods, it would include services, or any combination thereof, and it is being supplied in a bundled nature. So that bundling is not the work contract because the underlying item is the movable item. So the answer is either they would be the composite supply or they would be the mixed supply. On which factor it will depend, that we are going to discuss. So the composite supply has been defined in the GST as a supply made by the taxable person to a recipient comprising two or more taxable supplies of the goods or services or any combination thereof. So it can be one goods, one service. It can be one goods, two services. It can be 1 + 1 goods. It can be 1 + 1 services or any combination thereof. The only point, it should be the combination which are naturally bundled. Naturally bundled and supplied in conjunction with each other in the ordinary course of business, and one which is a principal supply. What is the meaning of principal supply? The principal supply means the supply of goods or services which constitute the predominant element of a composite supply and to which other forming part is ancillary. Example, supply of air condition and installation. So Mr. A purchased the air condition and also that particular air condition would be installed at the house of Mr. A. Now, in this particular category, we can say there are two supply. One is supply of the goods. One is installation services. Now, we all know that these are naturally bundled. In that case, will it be composite supply? Will it be mixed supply? Will it be goods? Will it be services? What could be the answer? They are saying, in case of the composite supply, you have to decide what is the predominant element and what is the ancillary element. In this case, we can say the predominant element is the air condition and the ancillary element is the installation. So therefore, this particular category of the supply is composite supply, wherein what is the principal supply? Principal supply is goods. Therefore, entire supply would be treated as supply of goods. And the rate which is applicable on the composite supply would be the rate which is applicable on principal supply. So I have explained 2-3 points. Let me repeat once again. When the particular supply would fall under composite, we have discussed that if there are two or more taxable supply of the goods or services or both, which are naturally bundled. So first important element is naturally bundled. Second, they are supplied in the ordinary course of business in the same way. Like you go in the hotel. So now it is a practice of the hotel industry that morning breakfast, free Wi-Fi, pick and drop facility are normally being included in the package. So what is the main principal element I can say the principal supply would be hotel accommodation. The principal is not the Wi-Fi. The principal supply is not the morning breakfast. But the principal supply is the supply which are predominant element in the bundle. So I can say the hotel accommodation is the predominant element. So in that case, the first condition is that it should be naturally bundled. Then second is there has to be the one principal supply and rest should be ancillary. So the entire combo would be called as composite. If it is called as composite, then what happens? The tax rate on ancillary supply would be same as principal supply. Same as principal supply. So let's say the principal supply attract the GST at the rate of 5%. But ancillary are 18%, 28%. What would happen? Entire combo would be taxable at 5%. Let me give you another example. That suppose one healthcare package is being supplied in a combo wherein some instrument, medicine are also being clubbed. So medicine per se, we know that it is a taxable supply. Some medical equipment, we know that per se it is a taxable supply. But when it is being sold in a combo and principal element is healthcare service, then entire combo would be called as composite, wherein principal is healthcare and healthcare is exempted, entire combo would be exempted in the GST. So now we are moving to the mixed supply. Then what is the meaning of mixed supply? The first point, the mixed supply means which does not composite supply. The supply which are naturally bundled. And what is the composite? Supply which are naturally bundled and one element is principal, that is called composite. It means the supply which are not naturally bundled and you are not able to identify the principal supply. In that case, that supply will always be mixed. No, that supply would be mixed if price is single. See, now try to understand that when we have read the definition of the composite, there is no condition with respect to price. It means price can be single for the entire combo. There could be the separate price or there could be no price for ancillary item. All possibilities are there in case of the composite supply. But when we are reading the definition of mixed supply, it simply says that two or more individual supply or any combination thereof which are sold for a single price, which are made at a single price and which combo does not constitute or does not means a composite supply. In that case, that particular combo will be called as mixed supply. So what is the difference between composite and mixed supply? If the combination is mixed supply, if the combo is mixed supply, then it would be chargeable at highest rate. Means, suppose one element is taxable at 5%. One constituent is chargeable at 12%. One constituent is chargeable at 28%. And one constituent is exempt in the GST. And suppose it is not the composite supply and single price is being charged, in that case, we can say on this particular supply, the 28% would be levied. Highest tax rate would be levied on that particular mixed supply. So this is the composite or mixed supply. We will discuss in one or two more circular also that particular concept. But if I like to draw the difference between composite and mixed supply, I can say that bundling. First, two or more goods or services which are naturally bundled, and it is not naturally bundled. The price should be, in case of the mix, there is the only condition that price should be single, but there is no such condition exists in case of the composite supply. And what is the tax rate? In case of the composite supply, it would be taxable at the rate applicable to the principal. And in case of the mixed supply, it shall be taxable at the highest rate of the taxes applicable to one of its constituent. So by this, we have discussed the composite supply. Let me move to the various concept of taxability, which has been clarified by way of circular in the supply chapter. Any question? Let me see. No. So taxability of cost petroleum. So we have to understand the concept also. What is that concept? When oil exploration and production contractor get a license or lease to explore or mine the petroleum crude and on natural gases from the government, it enter into the PSC, production sharing contract with the government. Now this relationship of the contract is not that of partners, but that of the licensor and the licensee. This is important element. Why it is important? Because it decides the taxability. They are not the partner. Who? Government and contractor. As per this agreement, when the contractor discovers the oil or gases, he will first recover the cost. Then, whatever the sale proceeds are there, they are expecting to share with the government the profit from this venture. This is also known as profit petroleum as per the PSC. Now the question is that whether this profit sharing would be chargeable to GST or not. Now the value of the petroleum which the contractor is entitled in a year for the recovery is called the cost petroleum. So there is one element, profit petroleum, which the part of the profit which is to be shared with the government. And what is the meaning of cost petroleum? That the cost which is to be recovered by the contractor. Then is called the government sharing of profit, which is consideration paid by the contractor to the government for the service of the grant of the license or lease to explore or mine petroleum crude, is exempted from GST. So that you will read again in the exemption chapter. But the point is that is exempted in the GST. So the cost petroleum is not a consideration received by the contractor for the service provided by the government and thus not taxable per se. So therefore we can say the profit petroleum, which is exempted in the GST, cost petroleum is not treated as a consideration and therefore it is not chargeable to GST. The reason for the same is that contractor carry the exploration and the production of petroleum for themselves and not as a service to government. So they had acquired the right to explore, exploit and sell petroleum in lieu of the royalty and share of the profit petroleum. So that was one doubt which has been clarified. Now, let me ask one question. We have discussed the definition of the goods and services. In the first class, we have discussed the definition of goods and services, in which we have understood that there are two common items which are neither goods nor services. Can you please tell me the name of the two common items which are neither goods nor services? Okay, there are two questions. The predominant element will never be decided based on the value, based on the size, based on the quantity, based on the price. No. There is no fixed parameter by which you can decide that it is a composite or it is a mix, or it is a naturally bundled or it is not a naturally bundled. No. It has to be looked into the multiple factor and fact of the case. Suppose that second question, Sankara, Mr. Sankara sir, suppose when fully furnished apartment are sold with all furniture, will that be mixed supply, sir? No, no. Because in case of the composite supply or the mixed supply, it should be two or more taxable supply. Because if the permanent, if it is an apartment, because apartment per se, we can say it is out of GST. Let's say I'm talking about schedule 3 para 5. So that is, if one element is non-taxable supplies, then that cannot be the composite supply or that cannot be the mixed supply in my view. So all are right. That question which is being asked by me, the two common items which are neither goods nor services, the answer would be money and security. Answer is money and security. Now, let's read certain items which are related to these money and security, and what is the taxability that we will discuss. Banks and financial institutions provide the bucket of the financial services relating to the lending, borrowing of the money, or investment in the money and other related services. For such services, the variety of instruments are used in the financial market. Let's discuss one by one. So, money include instrument like checks, draft, pay order, promissory note, letter of credit, etc. Activity that are only transaction in such instrument would be outside the definition of service. Because money and security are neither goods nor services. Money would also include the transaction in commercial paper, certificate of deposit. CP and CD are understood as unsecured money market instrument which may be used in the form of the promissory note or a dematerialized form through any of the depository approved by and registered with SEBI. CP are normally issued by the highly rated companies, primarily dealer and financial institution, at the discount to the face value. What about the CD? Can be issued by the scheduled commercial bank, etc. Now they are money, therefore they are neither goods nor services. While these transactions are outside the ambit of the supply, the related activity for which a separate consideration is charged is chargeable to GST. You remember the definition of services. In the definition of services, we have talked about services means anything other than goods, money, and security. But in that definition, we have also discussed if money is being converted from one form denomination or currency to the another form currency denomination, then conversion of that money would be chargeable to GST if separate consideration is being charged. Similarly, it has been clarified by way of explanation that if someone is facilitating in buying or selling of the security and for which separate consideration is being charged, then such facilitation would be supply of service. So on the same concept, they are saying that related activity for which separate consideration is charged is chargeable to GST if element of the other taxability are present. Now, the third instrument which we are talking about, derivative. What about the taxability of the derivative? So again, derivative are financial contract or instrument that derive the value from something else. What is the derivative? Derivative means that derive the value from the underlying asset. They are kind of the bet or agreement based on the price or performance of underlying asset rather than owning the asset directly. So the derivative per se is not any asset. They are based on the certain underlying asset. Normally, the derivative fall in the definition of the security and therefore they are neither goods nor services and hence not liable to be taxed. Further, it has been clarified that derivative are normally two categories. One is future contract, one is forward contract. What is the difference between future contract and forward contract? That future contract are standardized derivative contract and traded on the organized exchange, mark to mark daily, whereas forward contract are customizable over the counter derivative, not traded on organized exchange, negotiable between two parties. So you can further discuss in the FM particular your book in that particular syllabus. But for the time being, if we talked about taxability of the GST on these derivative. So first we have discussed that derivative are security. Per se, they are not chargeable to GST. But they are saying, further they are saying, if there is any delivery option, it means future contract are in the nature of the derivative. These qualify as security not chargeable to GST. But at the same time, if there is any delivery option, it means you are taking the delivery of underlying asset. In that case, it will be converted into the supply. So what is the underlying asset? And accordingly, the GST would be charged. But if there is a delivery option, whether it is future contract or it is a forward contract, if there is any delivery option, then in that case, it will be treated as supply. GST implication on the secured debt. Sale, purchase, acquisition or assignment of secured debt does not constitute the transaction in money, and it is in the nature of the derivative and hence it is a security and neither supply the goods nor supply of service. Transaction in instrument like interest rate swap, foreign exchange swap would be excluded from the supply because these instruments are derivative and derivative are security and security are excluded from the supply or from the definition of the goods as well as services. GST implication on services by way of extending the loan, deposit or advances. This point would also come sometime. What is that particular concept? If that particular, what is the GST implication? So they are saying they have taken the reference of one para of the exemption notification that service by way of extending the deposit, loan or advance insofar the consideration represent the interest or discount other than credit card. So if let's say bank has given the loan on which they are charging the interest, so the service of interest would be exempted in the GST. But if it given on the credit card, so the bank has extended the loan, deposit, etc. on the credit card for which they are charging the interest, then this interest would be taxable in the GST because other than credit card is exempted. Rest are other than credit card is exempted. If it is credit card, then it is taxable. Now that is one very interesting concept, and you will Also discuss this in the reverse charge mechanism RCM chapter. Can anybody tell me that? So because you all have completed the inter, you all have completed the inter. So please tell me that is it RCM transaction? Who will pay the tax in this case? Who will pay the tax in this case? So the first point, lending of security, that is as per the scheme of the security lending scheme of SEBI. So there is a scheme which concept we will discuss in detail, but my question is, what is that security lending scheme? No, my question is that in this particular transaction, who will pay the tax? Krishna Tiwadi is asking why GST on interest on EMI of credit card, because if you refer the exemption notification, interest on the long-term loan advances insofar the consideration is represented by way of interest, within that exemption notification, they are excluding credit card service. So it means if it is on credit card, it is not exempted, therefore it is taxable. Mansa, GST on crypto, as of now, it is not per se treated as taxability. There is no taxability on the crypto, only for the commission part or only for the if there is any platform fees for the crypto, etc., then the GST would be there on that platform fees. But crypto per se, it is not taxable. Suppose I have purchase of 1 lakh and I have sold in 2 lakh rupees. Let's say, then there is no GST in my hand. Okay. As of now. But in this case, who will pay the tax? That is my question. I expect everyone will give the answer. I am expecting everyone will give the answer. Very few answer has been received. So, what is that particular transaction? SEBI has prescribed one scheme, that is security lending scheme. Hereinafter is referred as SLS, for the purpose of facilitating the lending and borrowing of the security. So one would be the lender, one would be the borrower, and in between there would be the approved intermediary. Lender will lend the securities to the intermediary, and intermediary can give the security to the borrower, for which borrower will pay certain amount, and this he will pay the tax under reverse charge. Who is a supplier? Lender is a supplier. Who is a recipient? Borrower is a recipient. As per RCM notification that we will discuss in the RCM chapter. In the reverse charge mechanism chapter, the tax would be paid by the borrower. And the most important thing that also we will discuss in that respective RCM chapter, here the tax would always IGST. That has been clarified by way of circular 93, but yes, the tax would be paid as IGST. So the lender, who is the lender? Lender is the person who deposit the security registered in his name or in any other person duly authorized in this behalf with approved intermediary. The purpose is lending under the scheme. The borrower is a person who borrow the security. And approved intermediary is a person duly registered with the SEBI under that scheme, who lender will to whom lender will deposit and borrower will borrow the securities. SLS does not considered as lending of security as disposal of security. It means that is not the disposal of security. What is the difference between disposal and this scheme? Disposal means if it is a disposal, so in that case, it will be considered as a sale of securities. So securities and money per se, not goods, not services. Therefore, that transaction would be out of GST. But SLS is not the disposal of security, and therefore it is not out of GST. So whatever the lending fees charged from the borrower has the character of consideration, and therefore it is taxable in the GST. Apart from the above, the activity of intermediary for facilitating lending or borrowing of the security are also taxable separately. So there are two taxability. There are two transactions in this particular case. What are the two transactions? One, which the lender charging the lending fees. For this particular transaction, the borrower will pay and lender would be the supplier, borrower will be the customer. That will lending fees would be covered under the reverse charge mechanism. Borrower will pay that. Further, because this approved intermediary are facilitating this transaction, so he will also charge certain commission, certain service charge, etc. Then that commission or the service charge would be taxable as forward charge mechanism separately. So might be, let's say, he's charging certain amount to the lender. Then in that case, he will raise the tax invoice and he will pay this amount along with GST to the approved intermediary. I hope it is clear. Now, in the last class, I have told that regarding the Schedule 1, Para 3, principal to the agent, we will discuss one circular. Now, today we are going to discuss that circular. Let me recall that particular, or let me ask first, what is the Schedule 1? Before moving to the discussion, please tell me what is the Schedule 1. What is the Schedule 1? Waiting for your reply that what is the Schedule 1? Now we can talk about that Schedule 1 means supply without consideration. So there are certain transactions or activity which we have discussed, but that will be the supply even there is no consideration. Free of cost का transaction भी supply मान लिया जाएगा by virtue of that particular entries. So there are total 4 activities, 4 para. Let me recall the para number 3. Let me recall the para number 3. Sorry, 1 minute, please. What was the para number 3? Para 3 talking about first point that it is only for the goods. By the principal to the agent, where agent undertake to supply such goods on behalf of principal. And second, by the agent to the principal, where the agent undertake to receive such goods on behalf of the principal. In the first clause, they are talking about goods being supplied by the principal to the agent, where the agent undertake to supply the goods on behalf of the principal. And second, when the goods are being supplied by the agent to the principal, where the agent undertake to receive the goods on behalf of the principal. Now the question was, there are two categories of the agent. One agent who is issuing the invoice in the name of principal. One agent who is issuing the name of in his own name. So agent issuing the invoice in his own name. So which category of the transaction will be covered in the para 3? Or in other words, I can say which agent basically are covering in the para 3. That part we are talking about with the help of circular. So section 2 clause 5 define the term agent as person including the factor, broker, commission agent, adatiya, del credere agent, auctioneer, or any other mercantile agent by whatever name called, who carries on the business of the supply or receipt of the goods or services on behalf of another. That is okay. Now, they have also discussed the definition of the principal. Principal means on whose behalf an agent carries on the business of supply or receipt of the goods or both. Goods or services or both. Now the question is, the particular principal agent relationship fall in the ambit of para 3 of the schedule 1 or not is basically the deciding factor is whether the invoice for further supply on behalf of the principal is being issued by the agent or not. What is that? Where the invoice for further supply is being issued by the agent in his own name. So it means suppose Mr. A is a principal and Mr. B is the agent. When Mr. B making the supply to the customer, he is issuing the tax invoice in his own name. Like he is making the invoice like it is being sold by him only. In that case, the agent, in that case, this would fall in the para 3 above. Same, if the invoice, contrary to this particular point, if the invoice is being issued by the agent to the customer in the name of the principal, then that agent will not fall in the ambit of the para 3. It means in that case, when the principal, so what is the crux of this particular discussion? Crux is principal, agent, and customer. If this agent is issuing the invoice in his own name when he is selling the goods to the customer, then I can say the transfer of the goods by the principal to agent will be covered in the schedule 3, and this particular supply by the principal to the agent, it is treated as supply even without consideration and chargeable to GST. Second scenario, if when A supplying the goods to the customer but issuing the invoice in the name of the principal only, in that case, by principal to agent, it is not treated the supply per se. Similarly, because there are two para, when the goods being procured by the agent on behalf of the principal, but the invoice has been raised in the name of agent, then the further provision of the said goods by the agent to the principal would be covered by the para 3 above. I hope it is clear. That was a very excellent circular which has been clarified this concept. Now there is one more circular on the del credere agent that we were discussing. I hope it is clear. If you have any question, please let me know. Hey, any question? Please let me know. Is it clear? Please confirm. Or any doubt? Surya Rohit, yes, definitely you can listen the class, because listening the class will always help you. even if you are appearing after that particular May 24 attempt. So, next circular is clarification with respect to the del credere agent. Now, what is the del credere agent? The commercial terms, the del credere agent basically is a selling agent who is engaged by the principal to assist in the supply of the goods or services by contacting potential buyer on behalf of the principal. The factor that differentiates the DCA from the other agent is the guarantee. DCA gives the guarantees of the payment. So it means if the actual customer default in making the payment, then such del credere agent will make the payment to the supplier. That is the additional thing. And because of that, the commission percentage would be comparatively higher of del credere. In such a scenario where the buyer failed to make the payment to the principal, then DCA make the payment to the principal on behalf of the buyer, effectively providing the insurance against the default. And for this reason, the commission paid to the DCA relatively high, that we have discussed, correct? Now, what is the clarification? In order to timely payment, guarantee of the timely payment, the DCA can resort to the various methods, including extending the short-term loan to the buyer or paying the supplier himself and recovering the amount from the buyer at a later date along with interest. This loan is to be repaid by the buyer along with interest at a rate mutually agreed. Now, what was the clarification? Circular 73 as clarifying the multiple things. Let's read one by one. Point number 1. That this del credere agent will fall under the ambit of the agent under para 3 of the schedule 1. So this circular has given the cross reference of earlier circular 57. It says that it will be depend upon the situation that who is raising the invoice. In case where the invoice for supply of the goods is being raised by the supplier to the customer either himself or through DCA, then DCA does not fall under the ambit of the agent, because in this case invoice is in the name of the supplier. Second, but in case when the invoice is being raised by the DCA in his own name, it would fall under the ambit of schedule 1 para 3. So what is the change in the scenario if that is the agent as per the para 3 of the schedule 1, or it is not the agent as per the para 3 of the schedule 1? What is the difference? Difference is when principal send the goods to that agent, will that transaction be taxable in the GST or not? That would depend upon the invoicing pattern of the agent when he supply the goods to the ultimate consumer or when he receive the goods from the other vendor on behalf of the principal. So, will that principal to agent or agent to principal, will it be treated as supply? It will depend upon the invoicing pattern by agent to the customer or by other vendor to the agent. I hope this point is clear. Now, second important point, whether the temporary short-term transaction based on transaction-based loan, which is extended by the DCA to the buyer, for which interest is being charged by the DCA, is to be included in the value of the goods being supplied by the supplier where DCA is not an agent. Very important question. Let me repeat once again. They are saying whether the temporary short-term transaction-based loan extended to the buyer for which interest is being charged by the DCA, will that interest be added in the value? Which value? Being goods supplied by the principal to the ultimate customer when this DCA is not the agent. Because if DCA is not the agent as per para 3, please give the answer. Please give the answer. It will give me the clarity that concept is clear or not. If that DCA is not the agent under the para 3 of schedule 1, then the invoice would be raised in the name of by the principal. So invoice would be prepared in the name of the principal or in the name of the DCA. When DCA is not the agent as per the para 3, then the invoice would be invoice would be raised in the name of the principal or in the name of the DCA. Please give me the answer. Then I will move to the this particular question. Abdul Rahim, answer is yes. When the agent is procuring on behalf of the principal and the agent is purchasing in his own name for the invoice, then the further supply by the agent to the principal would be taxable. Absolutely correct. Geeta Patel, I hope the concept is clear. Mansa is asking if agent issue the invoice in the name of the principal, then it would not be supply. When it is not the supply, when the principal sending the goods to the agent. Correct. When agent is selling the goods to the consumer, then obviously the invoice would be raised either in the name of the principal or in the name of the agent. So, as per your point, if the agent preparing the invoice at that point of time, at the time of sale, in the name of principal, then the goods which has been sent by the principal to the agent, it is not the supply. Clear? Thank you so much. So, you all have given the clarity that in this case, if that DC is not the agent as per para 3 of the schedule 1, in that case, invoice would be in the name of the supplier, that is principal. Now, what are the number of transactions in this case? One is supply the goods from principal to recipient. One is that transaction. Second is agency service from the DCA to the supplier or the recipient or both, because he will charge certain commission. So that commission might be to the supplier also, might be to the recipient also, might be to the both also. Then third transaction, supply of extension of loan by the DCA to the recipient. So there are three transactions. It is clarified that in case where the DCA is not the agent, it is being clarified that in case when the DCA is not the agent as per the para 3 of the schedule 1, the temporary short loan provided by the DCA to the recipient, it would be on principal to principal basis and is independent supply. This particular transaction will be, it is an independent supply when this invoicing pattern is in the name of the principal. So they are saying service by way of the extending loan, deposit, etc. by way of the interest are exempt supply as per this serial number 27, and therefore the interest being charged would not form part of the value of the goods supplied to the buyer by the principal. So it means one invoice. What was the question? Let me repeat the question. Invoice raised by the principal or raised in the name of the principal to the customer. Let's say it is 1 lakh rupees. Whether the interest which is being charged by the agent to the customer, will it be added in the value or not? So the answer is, first answer is, if that DCA is not the agent per se, then it will not be added because it is a separate supply. Because it is a separate supply and therefore it would not form part of that particular goods. So now the next, when the DCA is the agent. So now the question would again very, very important. Suppose if the DCA is the agent and make the payment to the principal on behalf of the buyer and charges interest to the buyer for the delayed payment along with the value of the goods being supplied. Whether this interest will form part of the value of the supply or not. Now, the point is DCA is the agent. Okay? They are saying in the such scenario, the following activity are taking place. First, supply the goods by the principal to the DCA. Now, why I am saying here the DCA? Because this is an agent as per the para 3. Then further supply the goods by the DCA to the recipient. In the last, there is one transaction. Supply of the agency service by the DCA to the supplier or the recipient or both. And third is extending the credit to the recipient. It is clarified in case when the DCA is the agent under para 3 of schedule 1, the temporary short-term loan provided by the DCA to the buyer no longer retain the independent supply. It no longer retain the independent supply. It is subsumed in the supply of the goods by the DCA to the recipient. In this particular second transaction, it will be considered that he is also providing any other ancillary services. It is emphasized that the activity of extending the credit would not be considered as a separate supply made by the DC to the recipient. It is further clarified. Now, when you will read the valuation chapter, then there is a concept of section 15 subsection 2, which talks about please add 5 things in the value. So one is taxes, one is small carpenting, any other charges, some is payment on behalf of that principal. So you will read the 5 things which is to be added in the value as per 15 subsection 2, wherein clause D is talking about that interest, late fees or penalty for what? That is important for the delayed payment of any consideration. Very, very important. What I like to highlight, if suppose any interest which is being charged normally, then it is exempted in the GST. It is exempted in the GST except credit card. But if you read the section 15 subsection 2 clause D along with time of supply chapter, one quick question after this. So then let's say that interest for delayed payment of any consideration, not all interest, only for the delayed payment of any consideration. So interest, the name could be the late fees, name could be the penalty, but which is being charged for the delayed payment only, then it will be added in the value. Now added in the value, it is not as independent supply, added in the value. So what would be the taxability? The taxability would be based on the like composite supply. Quick question to all of you. Because you all are the student of the CA final, I assume that everything which you have read in the CA Inter is remember. So please tell me, in the case of interest for delayed payment of any consideration, what is the time of supply? Interest, late fees or penalty for delayed payment of any consideration, what would be the time of supply? So you can talk about 12.6 or you can give me the answer based on 13 subsection 6, because both are same. So whether it is goods or services doesn't matter. Main supply. Whether it is goods or services doesn't matter because the time of supply remains same. My question is, what is the time of supply if interest, late fees or penalty is being charged on delayed payment of any consideration? What would be the late fees? What is the time of supply? Time of supply is, wow, very nice. The date of actual receipt of such addition in the value. The date when such addition in the value is being actually received from the recipient. So this is the time of supply for interest, late fees, or any penalty for the delayed payment of any consideration. Then this is not taxable as per the accrual basis. It is on the receipt basis. Absolutely correct. Appreciating everyone who has given the right answer. Very nice. Rather, I should say all has given the right answer. We are moving to the clarification on the sales promotion scheme. So free sample, buy one, get one. So there are various type of the scheme of sales promotion. What could be the GST impact on that? So circular 92 has clarified this particular part. It is being clarified that sample which are supplied free of cost without any consideration, the free sample will not be treated as supply under GST. But whenever we talk about the word free, we will always give the reference of the schedule 1. We are saying except where the activity fall under the ambit of schedule 1. So it means suppose I am giving any item as a free of cost because there is no consideration. So the prima facie we can say that it is not chargeable to GST because it is not a supply, except or only when if it is covered under the schedule 1, you have to pay the GST. Second transaction, buy one, get one offer. What is that? Buy one, you will purchase one shirt, then one additional shirt will be given as a free of cost. That was the concept. So prima facie, it appears that first shirt which is being sold, this is for consideration, and second shirt which is being given of free of cost will be, it is a free supply. That is the primarily when we look into the transaction, but that is not the case. Circular 92 has clarified that this shirt which is being additionally given free of cost, it is not the supply of individual item, rather it is a supply of two items at single price. It may appear at first glance that in case of the offer like buy one get one item is being supplied free of cost without any consideration. In fact, it is not an individual supply of the free goods. Rather, it is a case of the two or more individual supply where the single price is being charged for the entire supply. Now, it can be treated as composite supply or mixed supply based on the other element like naturally bundled, like presence of principal supply and ancillary supply. So based on that, you will decide whether it is an composite supply, mixed supply, but it has been clarified that it is not the individual supply. So you cannot say that it is one item which is being given free of cost. This particular part you will also discuss in the ITC chapter 17 subsection 5 clause H, which talks about that if something is being given free of cost, then ITC would not be available. ITC would not be available. If something has been given free, then ITC would not be available. So in this case, it is not the free item. It is basically supply of two or more item at a single price. So entire combo would be taxable either as a composite or as a mix. So therefore, ITC would be available for every element. For every element. Now, that circular has clarified one more very important thing. Let's say they are saying that supply is free. Let's say the free thing has been given to someone. Let's say it is an employee and it is a free laptop worth of rupees 60,000 given to employee. Please tell me, will it be taxable or not? Along with reason. Kindly give me the answer. Will it be taxable or not? Please support. Please give the reasoning for your answer. One company has given the laptop permanently. It is permanently given to the employee worth of rupees 60,000. Will it be a taxable or not? So, because it is taxable, the reason is Schedule 1 is giving the reference that up to 50,000 it is not taxable. Gift up to rupees 50,000 is not taxable. So here, because my value is 60, it would be taxable. This circular has further clarified that if any free supply is okay. So there are a lot of counter argument. Let me talk about first. The point number 1, is it part of Schedule 3? Is it part of Schedule 3? Answer is no. Because it is not being given as an employer-employee relationship. What is covered in the Schedule 3? Try to understand. Schedule 3, services rendered by the employee to the employer. Please see the arrow. Please see the arrow. Okay? Services provided by the employee to the employer and for which employer is giving the consideration. So in this case, who is a supplier? Employee is a supplier of employment services. And who is the recipient? Employer is the recipient. This part is being covered in the schedule 3. In my example, the situation was different. The arrow is altogether in the reverse mode. In this case, who is a supplier? In this case, who is a supplier? I can say the employer company is basically giving the laptop to the employee worth of rupees 60,000. So one participant has raised the link, is linked with the schedule 3. So it is not covered in the schedule 3. I hope this part is clear. This particular answer is to the linking with the schedule 3. Okay. Now, one participant is also linked with the office use. So I do agree if it is office use, but I have told you that employer has given permanently given to the employee, sold the same to the employee, let's say, gifted to the employee permanently, not for office use only. He has gifted. Now he will keep at home, he will use for whatever purpose he want. In that case, the linking is of office is not relevant here. Now the third thing, it will be taxable because employer and employee are related person. And because they are related person, therefore, whatever the supply more than 50,000, it would be taxable in the GST as per the schedule 1, even without consideration. But still, the item is free of cost. They are not charging anything from the employee. Circular 92 has clarified the situation, this situation, schedule 1 versus ITC, block ITC as per 17.5H. The circular 92 has clarified if one transaction is become taxable by virtue of the schedule 1, even that is free, but ITC would be available. ITC would be available. No requirement of reversal of ITC because it become taxable schedule 1 के virtue के कारण, and therefore there is no requirement of reversal of ITC. I hope it is clear. एक बार confirm करो. Entire discussion is clear of circular 92. Please quickly confirm. I hope it is clear. एक बार quickly confirm करो so that we can take a break of 15 minutes and then we'll move to the further discussion. Fine, fine. So let's take a break of 15 minutes. We will resume at 7:45. We will resume at 7:45 and then we'll do the rest of the clarification. So we will resume at 7:45. The break is being requested to be started. Now we are going to discuss the taxability of tenancy right under the GST. This tenancy right, they have clarified that in a certain state, there is a concept of pagadi system. What is that pagadi system? That pagadi system, the tenant acquire the tenancy right in the property against the payment of the tenancy premium, which is called as pagadi. So the landlord may be the owner of the property, but the possession of the same lies with the tenant. So basically, he has acquired some right by making some extra payment. The tenant pay periodic rent to the landlord as long as he occupy the property. The tenant also usually has the option to sell the tenancy right of the said property. In such case, he has the share the percentage of the proceed with the owner of the land as laid down in the agreement. Alternatively, the landlord pay to the tenant the prevailing tenancy premium to get the property vacated. So then it has been clarified. What is being clarified? That the activity of transfer of the tenancy right against consideration is covered in the supply and that is chargeable to GST. They have also clarified that this will not be covered in the schedule 3 para 5, that sale of land and completed building. It is basically the supply of services like other lease, tenancy, easement, occupy, then it is a supply the service. Although the stamp duty and registration charges has been levied on such transfer of the tenancy right. So now this particular certain execution of the document, it appears that it is covered in the schedule 3 para 5. They are saying it is still liable to GST merely because the transaction involve execution of a certain document which may require the registration and the payment of the registration fee, stamp duty, etc., would not preclude from the scope of the supply. So the tenancy premium that is chargeable to GST and it is not covered in the schedule 3 para 5. Now, they have also discussed one of the exemption notification. That if the property is the residential and it has been rented to the unregistered person or to proprietor, in that case, that service itself would be exempted in the GST. It is basically serial number 12 of the exemption notification 12 by 2017. It says that grant of the tenancy right in the residential dwelling for use as a residential dwelling against tenancy premium or periodic rent or both is exempted in the GST as regards service provided by outgoing tenant by way of the surrendering the right against consideration in form of the portion of the tenancy premium, that would be still liable to pay the GST because it is reverse transaction. It has been clarified in the circular 44. Now, let's move to the another transaction priority sector lending certificate. The priority sector lending certificate is goods and not securities. The PSLC are akin to the freely tradable duty scrip, renewable energy certificate, REP license or replacement license, which earlier attract VAT. So therefore, they are saying there is no GST exemption is being given in the priority sector lending certificate and therefore are taxable as goods. And if you remember that this supply of the priority sector lending certificate, which is being traded on the government e-Kuber portal, that there is a one online portal e-Kuber, and on which this trading is happening of that security. The transaction of priority sector lending are covered under reverse charge. The recipient will pay the tax under RCM. And GST payable on the certificate would be available as ITC to the buying bank. Further nature of the supply will be IGST. Okay, so in the last case, the reference of the circular was not correct, but the circular 93 says that PSLC would be qualified as IGST supply only. And similarly, there was one more circular which talks about that security lending scheme. Then borrower will pay the tax, that will always be IGST. So these two transactions will always be taxable as IGST. Now moving to the very, very important circular, that is circular 178. It is issued on 3rd August 2022. Now, they have picked one para 5 clause E of the schedule 2. In this para, they have clarified each and every term. What is the term? Agreeing to the obligation to refrain from an act, agreeing to the obligation to tolerate an act or situation, or agreeing to the obligation to do an act. It has been clarified, or it has been given in the schedule 2 that it will be treated as supply of service. Now that para has been clarified with the circular 178 by taking multiple examples, and I can say that this is become very important circular because it is a recent changes. Now, what is being clarified in this circular? That clarified agreeing to the obligation to tolerate an act or situation to do an act has following prelim that we have discussed. Now, agreeing to the obligation to refrain from an act, to tolerate an act, they are saying this would include the activity such as shopkeeper allowing the hawker to operate from the common area in front of his shop against monthly payment by hawker, or another example, RWA tolerating the use of the loudspeaker for early morning prayer by a school which is located in that colony, subject to the school paying an agreed amount to the RWA as compensation. So now these payment which is being received by the shopkeeper, that payment which is being received by the RWA will be considered agreeing to the obligation to tolerate an act or a situation and liable to be taxed. They have also covered agreeing to the obligation to do an act. They are giving the example that let's say one industrial unit agreeing to install the equipment for zero emission or discharge at the behest of the RWA. Against the consideration paid by the RWA, this time this RWA is making the payment to the industrial unit. Even though that emission is within the permissible limit, so industrial unit are not liable to install any equipment, any machine for this zero emission, but it is being done because of the special request of RWA, so that there would not be any damage to the person who is residing in that particular society. So now, based on his request, they are doing some act. They are saying that this would be agreeing to the obligation to do an act. They have clarified that all the above three activity must be under an agreement or a contract. It can be expressed or it can be implied to fall within the ambit of the para 5 clause C of the schedule 2. In other words, one of the party of such agreement must be under the contractual obligation to either refrain or to tolerate or to do. Repeating once again, that the activity which they are doing or they are refraining or they are doing or they are tolerating, that should be one of the contractual party. Now, next point, such agreement should be independent in its own right. Such arrangement or agreement can take the form of an independent standalone contract or maybe the part of another contract. Thus, a person can be said to be making a supply by way of the refraining from doing something or tolerating some act or situation to another person if the first person was under the obligation to do and then performed accordingly. Now, why they have explained? Because the multiple transaction they have explained, notice period, liquidated damage, cancellation charges, whether they would be taxable or not taxable in the GST, this particular explanation is very, very important. Such contract cannot be imagined or presumed to be exist. Underline the word cannot be imagined or presumed to exist just because there is flow of money from one party to another. This wording is very, very important. What is the normal thing? In the normal case, what happened? Suppose one party has received certain amount and which has been credited in the profit and loss account. Might be there would always be the allegation that because you have received certain money, so you need to pay the GST. Circular has clarified that mere flow of money from one party to another, it cannot be said that it is a supply. It is because of the contract. There must be the express or implied contract by the recipient of money to agree in return of the money paid to him. So there has to be the flow of money supported by contractual obligation. If there is no contractual obligation, but still the money is coming, no liability of GST. These words has to come. If the question would come, then these wording are very, very important. Consideration must flow in return to this contract or agreement. Some consideration must flow in return from the other party to this contract to the first party for refraining, tolerating, or doing. Now they have taken the taxability of some transaction in detail. First, they have taken the liquidated damage. What is the liquidated damage? They are saying it is a common for the parties entering into the contract to specify in the contract itself that compensation that would be payable in the event of breach of the contract. Black Law Dictionary define liquidated damage as cash compensation agreed to by a signed written contract for breach of the contract payable to the aggrieved party. The taxability. It is argued that performance is the essence of the contract. Liquidated damage cannot be said to be the consideration received for tolerating the breach or non-performance of the contract. So let's say if Mr. A has received one contract from XYZ Limited for construction of the factory to complete it within a period of 3 months. Now, if the work is not being completed within 3 months, then Mr. A has to liable or is liable to pay rupees 1 lakh to the XYZ Limited. Now, XYZ is receiving the money. Can we say that he is receiving by virtue of the contract? What is the supply? supply, we can merely say the supply is of non-performing the contract within the time limit. Whether XYZ would be interested to make such supply that non-performing the work within the time limit, it would not. They are saying they are rather the payment for not tolerating the breach of the contract, payment of the liquidated damage is stipulated in the contract to ensure the performance and deter the non-performance, unsatisfactory performance or delayed performance. Why that contract is being given? See, try to understand the difference. Here, XYZ is receiving the money because the work is not being completed within time. Rather, for this particular non-completion within the time, is a separate service given by XYZ to the contractor, Mr. A? Answer would be no. This is not a separate contract. Rather, it is inbuilt in the first contract just to ensure that work would be completed within time. That's it. Underline this word, that liquidated damage cannot be said to be consideration received for tolerating the non-performance of the contract. No one will tolerate the act of non-performance. Okay. So it cannot be said that he is tolerating because of that consideration. No. So liquidated damage is mere loss or a measure of the loss or damage that the parties agree would arise due to the breach of the contract. They do not act as a remedy for the breach of the contract. They do not restitute the aggrieved person. A contract is entered for the execution and not for the breach of the contract. The liquidated damage or the penalty are not the desired outcome of the contract. By accepting the liquidated damage, the party aggrieved by breach of the contract cannot be said to have permitted or tolerated the deviation or non-fulfillment of the permit. So again and again they are saying it is not the tolerate for which they are receiving the money. What we have discussed in the Schedule 2 Para 5 Clause E. Let me go back once again. Agreeing to the obligation to tolerate an act or situation. Here, we can't say that aggrieved party is receiving for tolerance because he would never be interested to tolerate that particular work not to be completed within time. Where the amount paid as liquidated damage is an amount paid only to compensate for injury, losses, or damage suffered by aggrieved party due to breach of the contract and there is no agreement express or implied by the aggrieved party receiving the liquidated damage to refrain from or to tolerate an act or to do anything, then therefore liquidated damage cannot be separately taxable in the GST. This circular has put the end to the multiple dispute or multiple possible dispute, because liquidated damage per se are big dispute and probably there would be multiple cases going on in the pre-GST regime and all are paying the GST. Almost all the taxpayer are paying the GST on such liquidated damage. But now after Circular 178, it has been put to end. The key, please wait till the end because from 8:30 onward, we'll do the revision of the entire supply chapter, whatever we have discussed in the class 1 and whatever we have discussed in the class 2. In both the classes, we will combine and we will do the revision of entire supply chapter. So make sure you should be there till 9 o'clock. Key in such cases, whether the impugned payment constitute the consideration for the another independent contract envisaged tolerating an act or situation or refraining from doing an act or situation or simply doing an act. If the answer is yes, then it is a supply irrespective of whatever the name it is being called. Or if answer is no, then it is not a supply. If the payment is merely an event and it does not represent the object as such, then it cannot be considered, it cannot be treated as consideration. In the above example, amount paid for acceptance of the late payment, early termination of the lease, or prepayment of the loan, cancellation of service by the customer is contemplated by the contract as part of the commercial term. So early termination is supplied by that is separately covered. Sorry, it is covered in between. Check dishonor charges. The supplier wants payment to be received on time, but does not want the check to be dishonored. So there is a never implied or express offer or willingness on part of the supplier that he would tolerate the deposit of an invalid, fake, or unworthy instrument of the payment. So therefore, the check dishonor charges, if that supplier is charging any additional amount for the check dishonor, then the fine or the penalty that the supplier or the banker impose for dishonoring of the check is penalty imposed for tolerating the act or situation, but a fine or penalty imposed for not tolerating or penalizing, thereby deterring and discouraging such act of giving such instrument. Therefore, check dishonor charges is not a consideration and therefore not taxable in the GST. Penalty imposed. Penalty imposed for violation of the law, such as traffic violations or for violation of the pollution norms, other law, etc., are not consideration and therefore not taxable in the GST. So they have explained very well. They are saying that law are not framed for tolerating the violation. This is not the money received for tolerating an act, because no law permit for violation or non-compliances. Because someone has done the compliances, so they have to pay the penalty. So this mere penalty is flow of money, but it cannot be said to be the part of the contract. That it has been received for not tolerating that particular non-compliances of any laws. The stipulate penalty not for tolerating the violation, but for not tolerating, deterring, penalizing such violation. There is no agreement between the government and the violator specifying that violation would be allowed or permitted against the payment of the fine. It cannot be said like that. That you do this non-compliances, you have to pay the penalty. So I will accept your non-compliances on making the payment of rupees of this much. It cannot be said that. There cannot be such an agreement, as violation of law is never a lawful object or consideration. In short, fine and penalty charges by the government imposed are not leviable to tax. Forfeiture of the salary or payment of the bond amount in the event of the employee leaving the employment before the minimum agreed period. Very, very important. The provision for forfeiture of salary, recovery of the bond in the event of employee leaving the employment are incorporated in the employment contract to discourage non-serious candidate for taking up the employment. The said amount are recovered by the employer not as a consideration for tolerating the act of premature quit of employment, but as the penalty for disguiding the non-serious employees for taking the employment and to discourage and deter such a situation. Why I am reading this time line by line? I am not explaining. I am reading line by line because the circular is very, very important. Altogether, they have put an end of the multiple litigation, and this is the new changes. So therefore, it appeared that circular might be very relevant for your exam point of view. So that is the reason I'm reading line by line item. Further, the employee does not get anything in return from the employer against payment of such amount. Therefore, such amount recovered by the employer are not taxable as consideration for the service of agreeing to tolerate an act or situation. Late payment, surcharge or fees. Facility of accepting late payment with interest or late payment fee fine is a facility granted by the supplier which is naturally bundled with the main supply. It is not uncommon or unnatural for the customer to sometimes miss the last date of the payment of electricity, water, telecommunication, etc. Almost all service providers will provide the facility of accepting the late payment with late fine or penalty. Early, even if this service is described as a service of tolerating the act for the late payment, it is an ancillary which is naturally bundled in conjunction with the principal supply and therefore should be assessed as a principal supply and it form part of the composite supply. Since it is ancillary and naturally bundled with the principal supply such as electricity, water, telecommunication, cooking, gas, insurance, it should be assessed at the same rate as applicable to the principal supply. So let me give you the example. Suppose it is electricity. Suppose it is electricity bill, which is to be paid by the date and the particular recipient has not made the payment within time. So he is giving the additional amount to the electricity company. So this late fees, this penalty for delayed payment of any consideration, we have discussed section 15 subsection 2 clause D that interest on delayed payment of any consideration would be added in the value, but it will be taxable according to the principal supply because the principal supply is of electricity which is exempted in the GST. Therefore, such addition in the value would also have the same treatment which is for the principal. If the principal is exempted, the ancillary would also be exempted in the GST. I hope it is clear. एक बार what is meant by private sector lending? Please give the example about Ecobear also. I have seen the question slightly late. Let me complete this circular, then I will take up all the question. Whatever the question is being raised, till now, I will take up all the question. Is that okay? Pooja and Mr. Abdul, everyone. I will take up all the queries which you asked. थोड़ा सा मैंने लेट देखा. Fixed charges for power. Now, in the electricity bill, there is two component. One is the fixed charges and one is the variable charges. One is the fixed charges, one is the variable charges, right? Fixed would always be fixed and variable would be depend upon the number of unit consumed. This point is the fixed charges. This point is for the taxability of the fixed charges. The price charged for electricity by the power generating company from State Electricity Board, DISCOM, or by SEB or DISCOM from individual customer has two components, that minimum fixed charges and variable charges. The fact that minimum charges remain same whether electricity is consumed or not, or it is scheduled or consumed below the contracted or available capacity or a minimum threshold, does not mean that minimum fixed charges. Now try to understand. This particular minimum fixed charges has been interpreted in different manner. That can we say it is a scheduled or consumed below the contracted or the available capacity or a minimum threshold does not mean that minimum fixed charges or part of it charges for tolerating the act of not scheduling or consuming the minimum contracted or available capacity or minimum threshold. Now what they are saying, that you cannot say that fixed charges is basically the charges for tolerating the act of not consuming the minimum capacity or minimum whatever the unit. Both the component minimum fixed charges and variable charges are for sale of electricity and thus not taxable because electricity per se is exempted in the GST. Cancellation charges. It is a common business practice. Now, here the stand is something different. It is a common business practice that such as hotel accommodation, tour and travel, transportation to provide the facility of the cancellation of the intended supplies within a certain time period or payment of cancellation fees. Cancellation fees can be considered as the charges for the cost involved in making the arrangement for the independent supply. Cost involved in the cancellation of the supply, such as cancellation of the reserve ticket by Indian Railways, services such as transportation, travel and tour constitute the bundled supply. The transportation services, for instance, start with booking of the ticket and last at least till the exit of the passenger from the destination till travel. So all services such as making available an online portal or convenient booking counter with basic facility at the transportation terminal in the city to reserve the seat, issue the ticket, etc. Would extra cost launch, waiting room at airport, railway station, bus terminal, provision of the basic amenities, etc. They constitute the various element of the passenger transportation service and therefore it is form part of the composite supply. The facility of servicing of allowing cancellation against the cancellation charges now will also be naturally bundled. It is invariably supplied by all the supplier of the passenger transportation service and therefore it is naturally bundled and in conjunction with each principal supply the transportation in the ordinary course of business. Now you can see in the circular, they have looked at the natural bundling. From which perspective? They have looked at the natural bundling concept from the supplier perspective. That this practice is being followed by all the supplier in that particular category. So therefore, it cannot be said as natural bundling. So meaning thereby, the point which we are discussing in the composite and mixed supply, the concept of naturally bundling should primarily be looked from the supplier, not from the customer angle. Therefore, the facilitating supply of cancellation of intended supply against the payment of cancellation fee or retention or forfeiture of the part in such case should be assessed as principal supply. So therefore, all the cancellation charges collected by the hotel, travel, any IRCTC, so they are chargeable to GST. Accordingly, the amount forfeited in case of the non-refundable ticket is or security deposit or EMD, earnest money deposit, forfeited in case the customer failing to avail the travel, tour, operator, hotel accommodation intended shall be assessed at the same rate as applicable to the main supply. So This part is covered in the circular 178. I would request everyone to read the circular once again in detail. So let me, before going to the next circular, let me discuss about the query. So Pooja has asked the question that can you talk about the private sector lending certificate? So let's say there are two banks, and as per the requirement of the Reserve Bank of India, every bank has to give the minimum lending, certain threshold to every sector. So let's say Bank A has not disbursed any loan to agro sector or to education sector or to any other sector. Let's say MSME sector. But if they will not disburse at the end of the year, so they will be penalized from the Reserve Bank of India. So they have to disburse. So there is an alternate mechanism. They can go to any other bank and purchase the certificate. So let's say there is a cooperative bank who are only dealing in the agro sector, who are only dealing in the MSME sector. So might be that bank would have the more exposure. That bank would have the more exposure in the respective sector. So they can sell that certificate through one government e-portal that is named as e-Kuber portal. So now Bank A will purchase the certificate from that bank, cooperative bank, over the e-Kuber portal. So the Bank A will pay the amount to that cooperative bank and the transaction is taxable in the GST. Now, when you read the RCM chapter, or you might be remember that from the experience that priority sector lending certificate are taxable under reverse charge. Last one circular 93 has clarified that this particular supply would always be interstate and therefore IGST need to be paid. I hope it is clear. एक बार confirm करो पूजा. Abdul, are you there? Mohammed Abdul Rahim, are you there? Any other question if you have, please let me know. Then I will move to the last part of this discussion. Thank you, Pooja. So, Abdul, you have asked one question that regarding the tenancy premium. In the tenancy premium, it has been talked about that tenant will receive the tenancy premium from the landlord for vacating that particular premises. Mr. A is a landlord and he has given the building to Mr. B on rent. Now, there is a concept of pagdi system in some of the state, not on all the state. Let me share that particular slide also so that it would be easy for everyone. Now, pagdi system, the tenant acquired the tenancy right in the property against the payment of the tenancy premium. The landlord will be the owner, will always be the owner, but the possession will lies with the tenant, correct? The tenant pay the periodical rent plus tenant usually has the option to sell the tenancy right. So because tenant, so now that it work in both the way. So because he has acquired that tenancy right in the property, so he can sell in the market and whatever the amount he will get, that would be taxable in the GST and portion of the amount would be given to the landlord. Alternatively, the landlord paid to the tenant the prevailing tenancy premium to get the property vacated. So now what the tenant is getting, he is getting the tenancy premium, whatever the prevailing as per the market. So they are saying this particular tenancy premium has to be registered in the respective like stamp duty. Certain documentation has to be completed, but it doesn't mean that merely certain documents should be completed. It will fall under the Schedule 3, Para 5. They are saying that still subject to GST. It is form of the lease or the renting of the property declared to be the service in the Para 2 of the Schedule 2 as discussed in the table above. However, renting, so they are saying that renting of the residential property is an exempt service. So if grant of the tenancy right for use as a residential dwelling against the tenancy premium or periodical rent or both is also exempted in the GST. Further, when tenant is surrendering that right, tenancy right, and for which they are getting some amount, then it would be always taxable. So that is altogether the point which we have discussed in this particular point, para. Let me confirm so that we can move to the next point. Now, certain printing industries related issues were there that has also been clarified by Circular 11. It has been clarified that supply of the books, pamphlet, brochure, envelope, annual report, leaflet, carton, boxes, printed with the logo, design, name, address or other content. The content is being supplied by the customer. Are composite supply. And the question whether such supply constitute the supply of the goods or services, that will be determined on the basis of what is the principal supply. They have given the two scenario in the case of the printing the books, pamphlet, annual report, where the content is supplied by the publisher or the person who own the uses right to the intangible input, while the physical input, including paper used for the printing, belong to the printer. In that case, it is a supply of printing of the content supplied by the recipient as the principal supply, and therefore such supply would constitute the supply of service. Whereas, in case of the printed envelope, letter card, printed box, tissues, napkin, wallpaper by the printer, using the physical input, including paper, to print the design logo supplied by the recipient, will considered predominantly supply of the goods. And the supply, the printing would be the ancillary in the nature, and therefore it is rated as supply the goods and chargeable accordingly. So this 2 point has been clarified by the Circular 11. Let me move to the one more concept. I am Institute study material. Now the point is activity or the transaction between a person other than individual and its member constitute for consideration. Or okay. You remember that 7 subsection 1 clause AA, we have discussed that the activity or the transaction other than individual to its member would consider to be the 2 separate person, deemed to be considered 2 separate person. And the explanation was talking about that irrespective, notwithstanding anything contained in any decree, any order of court, tribunal, etc., the particular association and the member will be considered as 2 separate person, and there is a supply between both of them. So they are saying the aforesaid explanation prevent the application of the doctrine of the mutuality by such person. So they are saying that they are considered to be the two separate person and the supply of the activity between them shall be deemed to have been taken place. The explanation is start with the non-obstant clause. So they have given some example. Let me talk about one or two example. The Residential Welfare Association RWA of one society supply the air condition to its member at a concessional price, or RWA collect the maintenance charges from its member for the service provided. Here in both the aforesaid example, it shall be deemed that Residential Welfare Association and its member are two separate person, and it shall be deemed that the supply has been taken place between them and therefore chargeable to GST. Now, in the exemption notification, you will discuss that if the collection is up to 7,500 per month, in that case, that the transaction per se, maintenance, collecting the maintenance from the member by the RWA would be exempted in the GST. So therefore, the first instance, the transaction is taxable. Now, if the amount is certain limit, then it is exempted. If it is beyond that limit, then it is taxable in the GST. From my side, this supply chapter is completed. And if you have any doubt, any question, you may ask. Let me talk about this concept also. This is very important to understand the particular point. See what happened earlier. So my point is, whether Schedule 2 decide a transaction is a supply or not. What is my point? My point is, क्या Schedule 2 ये decide कर सकता है कि that particular transaction is a supply? Why I am saying so? I have to explain 7(1) clause D versus 7 subsection 1A. When the GST was introduced, there was a clause D earlier, which was talking about Schedule 2. 7(1) is the supply definition. Supply includes, you remember that supply includes multiple clauses are there. In the last, that there was a clause of Schedule 2. From 1 February 2019, this clause was omitted retrospectively. 7 subsection 1 clause D was omitted retrospectively, and new subsection was inserted, which says that, what it says, 7 subsection 1A says that if the transaction is a supply by virtue of the 7 subsection 1, then it is a supply of the goods or services, you will take the help of the Schedule 2. You remember what is the problem with the Schedule 2 earlier? Earlier Schedule 2 was incorporated in the law in the clause D under the supply definition. It was giving the impression that Schedule 2 not only decide that whether my transaction is a supply of the goods or services, but it also decide whether my transaction per se is a supply or not. The problem was because it was in the 7 subsection 1. And 7 subsection 1 was the definition of the supply in the inclusive manner. Finally, The Finance Act 2018, this particular clause was omitted, and with respect, retrospectively, 1 July 17, one new section 7 subsection 1A was inserted, and now it is giving the complete clarity that Schedule 2 can only decide whether my transaction is a supply of the goods or services. It cannot decide supply. Why? Because supply decide करने का work किसका है? 7 subsection 1 का. I hope it is clear. This part I have to clarify. So from my side, the supply chapter is completed. Over to you for any type of the query, and then we'll move to the quick round of the question answer. If residential owns rent for the commercial to the individual, then GST applicable. Correct, applicable. Residential dwelling given for the residence, only it is exempted. Tenancy premium is chargeable to GST. Is my understanding correct? Absolutely, Aniket. Only one exclusion, that if it is for residential dwelling given for the purpose of the residence, then it is not taxable, because that particular principal transaction, that that giving on the rent itself is exempted. Therefore, such type of the tenancy will be exempted. Otherwise, always taxable. So, Pooja, I would say circular 178 and circular 92 has to be referred in detail. Circular 97, 92 and circular 178. These two circular, it appear that it is very, very important. Rest of the circular are also important, like circular, I can say 57, principal and agent. That was also very good. But I would suggest that you should have the concept, remember the concept of every circular, which is added in the curriculum. So now, last 20 minutes, let me move to the quick round of the question answer. By this, we will try to revise the entire supply chapter. Again, the same question, which I have asked yesterday also, that the two important pillar of the supply. What are the two important parameter of the supply? So the answer is, what are the two important pillar parameter of the supply, which we have discussed in the supply definition? Consideration and business. Absolutely correct. If service is import of service and there is no consideration, it is in the course or furtherance of business, but there is no consideration, will it always be taxable, or there is some condition? If yes, then kindly tell me the condition. Import of service without consideration, when it will be supplied? Always, or you are required to check something? Import of service without consideration, will it always be supply, or you have to check something? What is that? Answer is right. Answer is, it should be supplied by the related person or same as other establishment of the same organization. Correct? Then only it is supply, otherwise not. As per the new circular which we had discussed in detail, whether cancellation charges taken by the hotel is taxable or not taxable. Whether cancellation charges taken by the hotel is taxable or not taxable in the GST as per this new circular. Uh, Mohammed, that part we have clarified. That part I have used that such import or service in the course or furtherance of business. Your point is correct. If it is not in the course or furtherance of business, then that taxability will not come. Taxability will not come. Absolutely correct. So import or service without consideration supplied by the related person. Huh, huh. Take. It was the cancellation charges taken by the hotel IRCTC are taxable in the GST. As per this new circular, we have talked about multiple examples which were not taxable, but only single transaction, that cancellation charges taken by the tour and travel services, travel operator, hotel accommodation, uh, IRCTC would be taxable in the GST. Now tell me which interest are taxable in the GST. Interest on the long-term loan, advances, etc. When it is taxable in the GST. Answer is credit card. Absolutely. If the interest, etc., is being on the credit card service, then it would be taxable. Otherwise, it is exempted in the GST. Buy one, get one free. Second item which is being given free of cost. Will the ITC be available of that second item which has been given free of cost? I am having one offer in my company that buy one shirt, get one shirt extra free. So the second shirt which I have given free of cost, can I take the ITC or not? Can I take the ITC of the second shirt which I have given free of cost? The answer would be ITC available. And what was the reason ITC available? Because it is not the standalone supply of the second item free of cost. Rather, it is a composite or mixed supply. Rather, it is a composite or mixed supply. Okay, which is being supplied for a single price. Now tell me, in the composite supply, what are the main condition for saying particular bundling is a composite supply? What are the main condition for saying that particular bundle is a composite supply? What are the main parameter which you looked into to decide that particular transaction is a composite supply? कंपोजिट सप्लाई के लिए आप क्या इंपॉर्टेंट कंडीशन चेक करेंगे? It should be naturally bundled. It should be in the course of furtherance of business, or ordinarily naturally bundled. That is okay. And one should be the principal, and the rest should be ancillary. Correct. What about the mixed supply? What is the condition which you checked in the mixed supply? For any transaction to be termed as mixed supply, what are the condition? What are the condition which you checked to say the transaction as a mixed supply? Correct. It should be single price, and it should not be the composite supply. Very nice. It should not a composite supply, and the price should be single. What is the difference in the tax rate if the supply is the composite and if the supply is the mix? Which tax rate would be applied if the supply is the composite, and which tax rate would be applied if the supply is the mixed? My question is tax rate for composite supply and tax rate for mixed supply. That is my question. In case of the composite supply, the tax rate would be applicable to the principal will be applied on that entire combo. In case of the mixed supply, the highest rate. Excellent. Now the next question, we have discussed in the schedule 1 para 3 the goods which is being supplied by the principal to the agent or by the agent to the principal. Now the point is whether particular agent would qualify in the para 3 of schedule 1 is depend upon which factor. Particular agent is covered in the para 3 of schedule 1 or not. What is the main deciding factor? What is the main deciding factor which will be help to classify the agent in the para 3 of the schedule 1? The correct answer is if the agent issue the invoice in supplier name or his name. if agent issue the invoice in principal name or in his name, when he will be considered as covered in the para 3 of the schedule 1. If he will issue the invoice in which name, his name or principal name? Answer is, if he is issuing the invoice in his own name, then only. If he is issuing in the name of the principal, then it will not be covered in the para 3. Thank you so much. We have discussed two transactions which will always be IGST. We have discussed two examples that in this case, the tax would always be IGST. Can you tell the name of that two transaction? Answer is priority sector lending certificate and security lending scheme. Very nice. Very nice. Thank you so much for your giving the accurate answer. Now, if the asset has been given to the distinct person, if any asset has been transferred permanently to the another GST number of the same permanent account number, and on that asset ITC has not been taken, will it be chargeable to GST? In There is no consideration. Please note that in this transaction there is no consideration. Supply of the asset by one GST number to the another GST number under same PAN, ITC has not been taken. Will it be chargeable to GST even without consideration? Answer is yes, it is chargeable to GST because no ITC is the condition in para 1, not in para 2 of schedule 1. So when the asset has been transferred to related party or to distinct party, whether ITC has been taken or not taken, it is irrelevant. In all cases, GST has to be discharged, provided it should be the supply. Now, can you please all tell me the two example of schedule 3, the two transaction of schedule 3, minimum two transaction of schedule 3, and this would be my two transaction. So we have discussed that there are total 8 activity in the schedule 3 negative list. Please tell me any two example of schedule 3. Then I will ask one more question. Any two example of schedule 3? Schedule 3. Someone has given the non-taxable supply as an example. So please note, alcoholic liquor for human consumption, 5 specified petroleum products are non-taxable supply. It is not the schedule 3. What is the schedule 3? Negative list, no supply. So fine, I got the answer. Schedule 3 like salary, employer-employee relationship, court tribunal fees, ठीक है. And then MP, MLA, etc. Municipal services, absolutely correct. After death, transportation, funeral, etc. Yes, sale of land, para 2 schedule, para 5 schedule 2, excellent. The last question for the day. There are two more activity has been added in the schedule 3 by way of notification. There are two more activity which has been added in the schedule negative list, not in the schedule 3 as a negative list. Can you please tell me this, that two more activity which has been added by way of notification in the negative list? So from my side, this class is completed. I'm waiting for the reply. After 2 minutes, we will conclude the class. If you have any question, you can ask. After 2 minutes, we will conclude the class with the answer of that my last question. And meanwhile, if you have any question, kindly raise that question. My last question was that there are two more activities or the transaction has been added in the negative list. So one is the schedule 3, 8 para, and there are two more activity which has been issued by way of notification. Because in the 7 subsection 2 clause B, government has the power to issue the notification. The two more activity has been added by way of notification. So very nice. Thank you so much. One is supply by way of the by the government working as a municipality under article and or as a panchayat under article 243G and 243W. First activity. Second activity, alcoholic liquor license. Alcoholic liquor license. So one question of Manan Khandelwal, that printing वाला सप्लाई सर्विस क्यों है? क्योंकि उसमें क्या है, बेसिकली कंटेंट आप देते हैं, मैं खाली प्रिंट करके आपको देता हूं. लेट्स से यू हैव गिवन मी द कंटेंट ऑफ द बुक, नाउ आई एम प्रोवाइडिंग यू द प्रिंटिंग ऑफ दैट कंटेंट ऑन माय पेपर. सो बेसिकली पेपर वुड बी एंसिलरी पार्ट, मेन पार्ट वुड बी द प्रिंटिंग एक्टिविटी. लेकिन दूसरा एग्जांपल जहां पे लोगो आपने मुझे दिया है, गुड्स आपने दिया, बट मैं क्या करता हूं, मैं आपको एनवेलप बना के देता हूं, मैं आपको एनवेलप बना के देता हूं, देन इट विल बी द सप्लाई ऑफ द गुड्स. So thank you very much. Good night to all of you. We'll meet in the next class with the new chapter. I hope everyone is clear. And if you have the doubt, you can ask in the next class. Thank you so much. Good night to all of you. Sir, आप क्लोज कर सकते हैं आज का सेशन.